Alright guys, I'm gonna go ahead and apologize for the audio quality now because I know it's gonna be kinda off. I don't have my mic. So I'm sorry about the audio quality, but I'm gonna kill two birds with one stone right here, and we're gonna make our video finishing up, of course, on our entries and exits, and we also gonna backtest the setups that happened throughout the week. So let's go all the way back up until Monday. We're gonna knock all of them out. We're gonna remove all these drawings. Let's go to our Forex factory. Alright. Let's go back to Monday, 18. Wait. Alright, so Monday was orange folder news Monday. Right, so we had that news at 10. So let's just go back and see what all wound up happening. Going to our 4-hour chart right here. You see we got this 4-hour bullish fair value gap. Right, just going through our pregame analysis just like we will always do. We got some liquidity resistance sitting right here. That lines up with this bearish fair value gap, but it's turned into liquidity resistance, so we're going to use this as liquidity resistance. Alright. So this is what it was up until 8 o'clock. Boom, we got that going on, and that's all I pretty much see that's just noticeable. We got this fair value gap in that. All right, so go down to the 15-minute. See, we got London's highs right here. See, we got London's lows sitting right here. It's 8:45, 9 o'clock, okay. 9:30. All right, so boom. Our macro has officially started. On the pregame analysis, I really didn't do too much what I predicted would happen or none of that shit. I really just went straight in. But I know we're sitting at a 4-hour bullish fair value gap. I know we're sitting in a 1-hour bullish fair value gap, and structure has been breaking these internal highs. So even though we were sitting in the range, I didn't have too much of a bias. I hate picking a bias pre-market for real. I just like paying attention to what structure is showing me at the time. So 9:45 started. I knew we had we know we got news at 10. So being that we have orange news at 10, we really want to wait until 10 o'clock news to try and take a trade. But we want to see how prices reacting to these liquidity levels as well. So whatever happens first, right? Every time I try to do a video, it's always terrible mic quality. I swear to God. But anyway. We come down, we sweep London's lows at 9:33. That's something that I'm always looking for. Did we sweep London's lows like early in our trading session, right? Did we sweep them before our macro session, right? So we see we got London's liquidity sweep right here at 9:33, right? Of course, we're breaking structure, internal structure to the upside, right? So we got those liquidity sweeps at 9:33, then we continue to break structures towards this upside, right? But market structure is continuing to shift towards the downside right here. So now we don't have any really like super clear market structures or shifts or breaking structures, but if we did have to bet on one, then the one that we would have would be like right here, because the market structure did shift above these highs. Even though it didn't close any strong displacement, we do got a market structure shift right here, right? But that's it. No really real displacement, no breaks and retests, nothing serious right now. So boom. Okay, we still on the 3-minute chart. That's 9:48. Nothing yet. All right, boom. 9:54. That's 10 o'clock. Okay, boom. At 10 o'clock, now we got a real breaking structure right here. Right at 9:57. Now we got a fair value gap that was created with the liquidity sweep, right? And we're coming out of a bullish, we're coming out of a bullish fair value gap. So that would have been a good time to go ahead and try to enter if you wanted to get aggressive and take a trade with London's highs. What time is it? So it's 10:18. If you didn't get in right here, you missed the trade. And I'm not gonna lie, I remember taking this trade live on a Monday and just understanding market conditions, understanding what was going on around 10 o'clock, waiting for the news to come out and seeing that, okay, boom. Well, shit. Actually, I'm capping. What's going on, Mo? You alright?
What's up, Sandy? Getting your podcast on?
No, I'm just doing some trade reviews. I day trade, so I be doing my little breakdowns and shit. Yeah.
Okay.
Yeah. A little stuff.
Oh, hell yeah, you do a day trade, goddamn.
So I'm just going back through the data and shit like that, seeing what happened, why it happened, etc., etc.
Yeah. Real life shit.
Oh God.
Okay, I see you. Don't forget me when you make it on that now.
Man, you know it. Crazy. But yeah, coming to the 3-minute chart again. I'm gonna start over. So we know that we're sitting in a bullish 4-hour and a 1-hour bullish fair value gap, right? We got a liquidity sweep right here at London's lows, and we got news at 10. So boom, the macro has started right here at 9:45, 9:48. We can see that our market structure is shifting back towards the upside. It created a small fair value gap right here. But I don't know if it's showing up on a 1-minute chart. Let's see. 9:49. Okay, boom. 9:48. So this was a liquidity sweep, a market structure shift with a bullish fair value gap left on a 1-minute setup. Now, I really don't take a lot of trades on a 1-minute setup, but I do like to know where the fair value gaps are setups, right? We got a double bottom, market structure shift right here. Right, I should say a pivot point, right? Because this double bottom right here, and now you could have waited until 10, but you could have taken this setup on a 1-minute chart too, because we got that, and we also got bullish displacement right here. So if you want us to take that 1-minute setup, this would have been cool. Sweep on liquidity, market structure shift, pivot point, displacement. Not my favorite setup at all, but I see everything that's going on. So now I can switch back to the 3-minute chart. Wait on that to get wicked into instead of haunting the 1-minute chart and stalking it. Put my stop loss 30 points, or just basically below this manipulation with a bullish bias, meaning that I'm sitting in a bullish fair value gap, and then make my trade like this. So that's what I mean when I talk about the entries, right? Our entries is always gonna be at the top of a fair value gap or above displacement. So even right here would have been a good entry after retesting this fair value gap and breaking above this level. Now your TP probably have just been a little bit, right, and boom, take profit hit. So that would have been Monday's deal, right? You just have to really, really be in tune and really, really locked in so you could take this setup, right? I like looking for confluences on a 1-minute chart, but I don't like taking them by themselves, right? We didn't get any bullish fair value gap on the 3-minute that was clear, so I had to use what was available right here on the 1-minute. It's all context. So that was Monday's trade. That was Monday's setup. If you wanted to wait until after 10 o'clock, you probably still could have caught a setup. Let's just see. So now we got a liquidity sweep right here. Right, it's 10:18. By this time, we pretty much done trading. 10:20. Right, 10:21. Maybe if price breaks below this, I'll get in short. But outside of that, I don't want to take anything else. All right, it's 10:27. We done trading for the day. that was the setup. That honestly was the setup, right? Like I said, on the 1 minute, that's why I gotta go back to this replay. 950. Now that everybody really got filled in. 952. That was nice. Nice setup. What's up, bro? Yeah. Alright, so reviewing this trade, I really want to speak through this setup. The reason why we also had news at 10 o'clock too right here. The reason why this setup I wouldn't have entered because I never got a break below either this candle or this candle. So now this bearish fair value gap got turned into an inverse bullish fair value gap, right? Now this displacement is turned into bullish displacement, right? And now we want to look for longs right here because I'm glad I'm recording and I'm just talking through why that sell didn't go through. Right, that sell got invalid because we never got a break below this candle with like bearish momentum. Now, if you would have gotten in on an aggressive entry at this fair value gap, you would have gotten stopped out, and that's why I really don't care for using aggressive entries, especially with it being such strong support right here, and we're still sitting inside of a bullish fair value gap, right? We're still sitting inside of this bullish fair value gap at the end of the day. So with us still sitting inside of that fair value gap, right? I would want to wait for a clean entry at this break because London's low got manipulated, we got support, and we are inside of a bullish fair value gap. So I can't just bet on an aggressive entry right here. I would need to see something get broken down. And y'all see I had sales ready to get set up, but being that I didn't get an entry or any bearish momentum break below this, I can't take any sales, and that's why being patient is so important. It's so important because now we're seeing, okay, we swept London's low. Now we also got an internal market structure shift right here, which is going to serve as our pivot point if we go down to the 1 minute chart. I'm pretty sure we can see it, but we can see it clear. This is where we took liquidity and now we're shifting back towards the upside. We can see it more clear right here in the 1 minute. So now we shifted structure again. We left after we shifted this internal structure or created this pivot point with this evening star pattern, a morning star pattern, excuse me. We left a fair value gap, right? Now I can use this fair value gap to get an entry on a 1 minute time frame if I wanted to, or I can just go back to my 3 minute time frame and be patient and take the entry off of this inverse fair value gap. So now my entry would be going long right here with my stop loss below the displacement candle. I could be really particular and put it at 30, but being that the candle is displaced, I want to give it a little bit of room to breathe. So about 37 pip stop loss, right? And then I'm going to aim for a 1 and 2. I'm going to try to cut that stop loss down a little bit, but we can see this gives us opportunity to take the break of candle entry, and if price comes back in and breaks and resets on this bullish fair value gap, we're in a safe spot as well. And you see the price did wind up coming back down at 10.12 and retesting this bullish fair value gap. So if you would have got in aggressive, you know, you would have saved yourself a few points, but from a 30 pip stop loss to a 36 pip stop loss, I think that was pretty cool. Pretty good risk management, right? Stops right here. And then we see price plays around. Do I get 60 points off of this? I still didn't get it yet. Price plays around. At this point, I can cut my stops a little bit tighter to 30 points. And we sat in this trade for a very long time, not gonna lie. Probably would have gotten out of break even, to be quite honest. But we can see price did wind up giving us our setup though. Even though it took all damn day, we did get our setup. So that's why, even though we had a beautiful sell opportunity setting up, it's very important to be patient, because the patience right there would have saved you from taking an unnecessary L. And that's why you really can't be afraid of FOMO. You cannot be afraid of FOMO, because FOMO 9 times out of 10 would have made me fuck up on that trade. But it's good because I'm back testing, I'm getting back my game sharp, I'm just learning the little small lessons that I need to learn, and it's all good. 26, So yeah, that's that dub. You could have took that 1 minute bullish fair value gap entry right at 952, or you could have took the inverse fair value gap entry. Either one would have been a beautiful entry to get in, and that would have been that trade. Displacement. I got in at the break a candle, but that it was a good entry as well. All right, so that would have been that trade. All right, so we're gonna look at Wednesday and see what news. So we didn't have no news on Wednesday. So Wednesday was pretty much a free for all, get it how you live type of day. I did look at Wednesday live too. I looked at the whole week live this week and pretty much got a good basis of and understanding of what was going on. So we're gonna go get into it. So coming into Wednesday, didn't really have any biases. I'm understanding that we still are inside of this bullish fair value gap. If I look at my 1 hour time frame, I'm seeing that we did get all the way up here to where this level of liquidity resistance is, and we did wind up getting a hard bearish momentum. But we are right here at a liquidity support level, right? And we also are sitting right here in this 4 hour, 1 hour bullish fair value gap. So I want to see how price is reacting at the start of the macro. We can already see that we do have a sweep on London. Right, we got a London liquidity sweep. So coming into the macro section, we got our London liquidity sweep. We already broke structure towards this downside, right? We already have our market structure shifts. So right now we're just waiting on some type of fair value gap or something to enter off of, right? No news or nothing going on, so I know I can be a little bit more aggressive with my entries. This is at 944. We already swept London's lows. Now I want to mark up this bearish fair value gap and just see how price reacts to it. So that's a bearish fair value gap. So price didn't even wind up breaking back into it. Oh, it did. Okay, boom, 944. So 945 gave us an aggressive push down, but we never retested into this fair value gap, so I didn't get an entry. Boom, I'm seeing right here at 946, we're getting a lot of bullish momentum coming off of this liquidity support and this hour bullish fair value gap. So now I'm just sitting back. I'm still waiting patiently. Okay, boom. Still didn't get tapped into my bearish fair value gap. So I'm just waiting. Still didn't get any entry yet. Boom. Still don't have an entry, and I'm monitoring on my 1 minute chart just so I can make sure I don't miss anything. All right, so now I'm seeing that we're getting a reversal indicator like on my on my 3 minute chart, right? Okay, now I'm seeing that we're trying to inverse. We're getting a little market structure shift right here coming off of this. We're getting a market structure shift, a pivot point coming off of that liquidity support and that fair value gap. So I'm seeing that market structure shift, that pivot point. With me seeing that, now I want to see, okay, are we going to inverse this bullish fair value gap and then try to head to this liquidity up here where our new draw liquidity would be, at previous day high and London's high. All right, so what time is 9:54? All right, going down to my 1 minute chart. 9:56. Okay, we do have a bullish fair value gap that's created right here, right? And we seeing that we getting tested off of that. So now I would want my entry to be, just so I can have the safest entry, I want my entry to be above that and below this. So I want a 30 pip stop loss, and I want my listening to be right up there. Actually, that's where I want my draw liquidity to be at. 30 pip stop loss, I'm going to be entering off of the inverse fair value gap, inverse bearish fair value gap, because I already retested this, right? I already got my bullish displacement. I got my bullish displacement right here, my market structure shift breaking structure, and I got my fair value gap breaking retest right here at this level. So that's my bullish fair value gap breaking retest right here. This manipulation. So I got that manipulation, displacement, got a breaking retest. So now I just sit and wait. All right. Like I said, boom. Price runs up, hitting our profit target. Beautiful trade, beautiful trade. Inverse fair value gap entry with this as a confirmation. That was beautiful. That was fucking beautiful. You could have even gotten your entry right here, right at 956, but it would have been riskier. This would have been the safest entry, safest way for the trade to breathe. It's beautiful shit right here. Beautiful, beautiful, beautiful. Yeah, so if I had to break this trade down a little bit better, just looking at it strictly on a 3 minute chart, what I would want to take heed of is the fact that we have a bearish fair value gap right here, right? I want to see how is price reacting to this bearish fair value gap. We did tap into it, right? So you could have gotten, let's even see, let's see, right? We did tap into it. So if we stretch this out, and you want to take an aggressive entry because you know it's right before 10 o'clock and the volatility is pretty much, a little bit more hectic, right? You could have done this and gotten a try to get a good 1 and 2. But practicality wise, you could wait until after 10 o'clock and then try to catch you a better setup because you're trading right into a liquidity support and you're trading right into a bullish fair value gap on an hourly time frame, and you don't have any structure supporting that we want to go below. And where would your draw liquidity be? It would be at the previous day low. It would make more sense for price to react off of this level and take some internal liquidity right here at previous day high and then get the external liquidity at London's high versus fighting all the way through this liquidity support and this hourly bullish fair value gap. That is just what makes more sense from a trader's mind thinking. But you still could have taken an aggressive entry and it wouldn't have been a bad idea, but it just, from a practicality standpoint, it wouldn't have probably been the smartest thing. So boom, you could even have gotten out on a sell on break even because a 1 to 2 would have been at 45 points and a 1 to 1 would have been at 22 points. So this really would have been a break even trade. You know what I'm saying? So let's just negate that. That's why that sell wouldn't have worked out, right? But if we come in, we look right here. Okay, now what indicators am I looking at? What am I reading to try to make an adjustment? If I skim on a 1 minute chart, I see, okay, I do have a bullish fair value gap right there. Boom, but I don't want to take no 1 minute entries. I'm just using this for extra confirmation, right? I'm sitting inside of a bullish fair value gap. I got manipulation with the S&T, right? I got my market structure shift pivot point with this evening star pattern forming, or morning star pattern, whatever you want to call it. I see it's a shifting structure toward the upside, right? We got a 1 minute fair value gap. Now my last thing that I want to ask myself before I'm committed to taking this long is, does this 3 minute fair value gap get inverse? If I know that we have all these confluences lined up and I see this 3 minute fair value gap get inverse, then I'm confident in taking that trade, right? Boom. It gets inverse. Not only does it get inverse, the candle flips down, it retests the consequent encroachment of that inverse fair value gap. So now I'm gonna take this and turn it to, now it's an inverse bullish fair value gap. We test it at that consequent encroachment, and now I know that our draw on liquidity from this point will be up towards this previous day high. And boom. A little turbulence up here, of course, but as you guys can see, we wind up hitting our profit target. So that's why I took that trade. That's why that trade makes sense, right? That, and then on top of that, because taking trades on a 1 minute is really like a lot of skill, right? It's a lot of skill. So when I take them on a 3 minute, it's a little bit like ultimate confirmation. I feel like the 3 minute chart is the most consistent chart because the 1 minute provides you with a lot of fake out. But if you learn how to use the 1 minute in combination with the 3 minute chart to line up like your confluence with your trigger finger, I think they work really well together. Like how I use this 1 minute fair value gap to confirm me taking this entry on this 3 minute inverse fair value gap. It's like, all right, bet. I know we got strong bullish momentum and our drawing liquidity is up there. So that was Wednesday's trade, and it was a beautiful trade. It really was. I'm not gonna lie. It was a beautiful trade. All right. Now we're gonna go ahead and go to Thursday. So it's at 6 o'clock. Our levels pretty much are the same. All right, let's go to Thursday and see what our news was on Thursday. We had 10 o'clock news on Thursday, so we want to wait, and orange for the news, so we kind of want to be patient and wait on that. Let's see how Thursday wound up playing out. So this at 9:36, 9:42. So already coming in, we can see that it looks like we got a nice continuation model lining up. We got London's high swept before the macro even gets started. So looking at that with that strong bullish displacement, it's looking really, really clear that we want to take longs, but we always want to wait for the reaction at these fair value gaps before we confirm entering or buying or selling. All right, so we swept London's highs right there. Now we have bullish displacement that I'm seeing as present. And like I said, this is not to marry a confirmation on the trade, but it's just so we can get an understanding of whether or not our confluences are lining up, right? So I'm seeing that we got this breaking structure towards the upside as well. So off rip, I'm seeing that all of my confluences are lining up. They are definitely lining up, and it's looking like we're good to take a buy, right? That's what it's looking like. But let's just see what happens. Okay, I know we got orange news at 10. Boom. So now we done came back into this fair value gap. It's 9:42. So if I do want to take a long out of this area, I want to take a long after we break above this candle, right? See right here, the stop loss below the displacement candle is literally 75 points, right? This is a 60-point stop loss. I don't want to take a trade this big. So what I want to do is scale down to the 1 minute time frame and see if I can find like a better type of entry, right? But if I had to say a setup, this would be the setup. I probably would take this and then risk lighter. But I really don't want to take a setup that has to have that big of a stop loss, right? So we never broke above this level, so therefore I didn't get an entry, and this trade is now invalid. Now I'm looking at, okay, what can I use for the opposite trade? It's looking like the trade wants to go to this. It's looking like the trade wants to go in a separate direction. Fuck, I can't talk, y'all. Okay, so this is going to be the liquidity sweep that I'm about to go ahead and use now, right? So the previous day high, we got a liquidity sweep from there. Now we're starting to see the market structure shift towards the downside. So this is where the market began to pivot right here. All right, we also have our bearish displacement right here, canceling out the bullish displacement from the previous side. And now I'm just waiting on a valid break and retest or a key level, right? It's 9:48. So I'm knowing it's at 10 o'clock. Okay, now I see we have our bearish fair value gap. I see we got our bearish fair value gap right here.
I don't like that.
No, that's fire. It was so organic.
No, I don't like that.
You need to stick with that. It's very witty and it just goes. So being that 10 o'clock news is coming up and we got London's lows right here. See you later, I'm talking about the Dion. See you.
Can I be nosy again?
Huh?
Can I be nosy?
Yeah, you could be nosy.
I won't be in the camera.
You could be, it's okay. It's okay. I didn't even know you was behind me. I felt like you was, but I didn't know. But yeah, you could be nosy.
This is a lie.
It kind of is, I ain't gonna lie. But it's not though.
What you clicking on? What's all those functions that you clicking on?
This is just stuff I kind of, templates and stuff I done came up with over the last 2 years of doing it.
I'll be lost.
Girl, what is this?
What is this?
A pie chart.
Yeah, it's a lot. That's what it is. It's a lot. It's the money.
She wasn't retarded.
Fuck her. Bye, nephew.
All right, see ya.
See you tomorrow, Dylan.
I will see you right back up so you can get this
You
case.
don't see nobody on Monday. Oh, shit. Come on Monday. You're right. You gonna come in now?
Okay, so to get back to the video, this was Thursday, and Thursday's price action was very, very interesting because this is where you got to be really, really use your market experience, right? So on Thursday, we had a good setup, right? We had a good setup right here that appeared to be going to work out for us, right? Once we had this bullish fair value gap, it got inverse, so it was no longer valid. Then price created, it took that inverse bullish fair value gap and just gave us a bearish fair value gap. So we took that, right? Of course, we didn't get any pullback into it. Price kind of wicked up a little bit and went straight down, so we got a lot of bearish momentum. Now, I'm knowing we got news at 10 o'clock, and it's already 9:51, and I haven't seen what price wanted to do at London's lows. So instead of trying to hunt this trade and chase this trade down before 10, I could wait until after 10 o'clock news and just see how price is going to react to this level so I can understand if price wants to take out these lows and then retrace and continue to go down, or if price wants to take out these lows and then immediately continue this bullish trend. That's why in this instance, I don't want to chase this trade too bad. Now, if I had to just take a short, if I just really didn't want to miss out on this trade, this would have definitely been a setup. But the bullish fair value gap didn't get there on a 3-minute time frame until after this candle was technically printed, right? And if we go down to the 1 minute, we never really got a real tap back into this bullish fair value gap, right? We never really, it was created from this 1 minute candle, but we never really got a real tap back into it. So our entry would have been below this if we had to take one, and that's too close to 10 o'clock news and London's lows. So it would have been really, really risky. But we could keep this trade up just for just so we can see how it would have wound up working out if you did want to take an aggressive entry. So if you did want to take an aggressive entry, you could. It would have been a really, really, really slim trade, and maybe you could have gotten in, maybe you couldn't. But from what I'm seeing, you would have just barely missed your entry by a few centimeters, and you barely would have missed your TP by a few centimeters. So this trade would have definitely been, if you would have taken it aggressively. From this point, if I don't get a break below this, it's really no need to take one, right? At this point. But I'm still committed to this sell. If I don't see any, it's 10:03, if I don't see anything break below that, I don't want it. Right? And I never got anything break below that candle. So therefore, I don't want that trade, right? Trade never wound up working out. Now, if I'm looking to reassess the situation, I can see that we got a liquidity sweep on London's lows right here. Right, I can see that we got bullish displacement coming out of that liquidity sweep. I can see that the market structure is shifting, right? We broke below this, we broke this structure. Now we're coming back above this level after taking out the liquidity from London's lows, and we're using this as support, right? But maybe you didn't get in right, because you know you had news at 10 o'clock, so maybe you wanted to wait until a little bit for the market to clear up a little bit. Now you have even more confirmation though, which works in your favor, because you got your liquidity sweep, your market structure shift, you got plenty of bullish displacement, and if you can't see it clear right here, you definitely can see it clear right here. And now you can just take you an entry off of this displacement right here and put your stops below this displacement candle. It'll be a little bit wider, but you could do that, and then, you know, have you a good 1 or 2 and just risk appropriately. Or you can scale in on a 1 minute chart and put your stops below there and wait on a retest of that fair value gap. So all based on what you want to do. That could have been your 2 ways of entering these trades. Right? So we didn't get a break above, so we didn't enter right there. We got a retest of our bullish, do we? Okay, we retesting this inverse, right? We retesting this inverse bullish fair value gap. And now it's like, all right, bet I see we're getting a retest off of that. If I get a break above this candle, I will make this my new entry with my stops. Now I can take like a 40-point stop loss. I can take that, right? Okay, and we got stopped out of that trade. And that's okay. That's okay because all of our confluences pretty much lined up to take it. The only thing that was bad about this trade, for real, we didn't get any strong displacement above. But it was at 10.15 too. So that's the only thing that I would say that was wrong with it. But it was a great ideology, right? Because what winds up happening, we get stopped out and then price winds up coming right back up to our profit target. So that would have been a day where you just like, you know what, fuck, I just took my L. Like, you would have just had to take your L because this was appropriate risk management. It was a great entry. You entered off the inverse fair value gap. Now, you could have gotten an earlier entry, and I think this is what I'm about to start doing. You could have gotten let me see. You could have gotten an earlier entry had you taken, no, it's still no fair value gaps right here on the 1 minute time frame. Maybe right there, if you would have caught an entry right above that and you used that fair value gap, maybe you could have caught the entry right at 10.03. But I know that's not really how I trade, so I wouldn't even. And you probably would have gotten stopped out, so I wouldn't even have had considered that, to be quite honest. The only early entry would have been maybe right here, entering off of the displacement formed at 10.05 and using that fair value gap. If you caught it live, maybe, but you still didn't have and you just went in right above consequent encroachment. But I'm gonna be honest, I'm still not mad at that trade or that entry because I feel like it's my system, so I don't have nothing to be mad at. You could have definitely gotten a 1 or 2 if you had taken this trade on a 1 minute time frame, but you know, we're not here to be perfect. We're here to just master our system, and for the most part, I will say that we're in the process of mastering it. Right? We didn't take this 1 minute setup. But that's not going to hurt us as bad as it is to keep trying to hunt 1 minute setups and be losing them. So this was a loss. We got stopped out literally by like a point right below that displacement candle. It was a really, really good stop loss level. And it just didn't happen to work out. And sometimes it be like that. But our 1 and 2 did wind up getting hit after it tagged us out right at 10:30. So boom, I'm going to just, it is what it is. That's Thursday's trade. Out here yet, bro? And then lastly, we're gonna go to Friday. This would have been, it's unfortunate, but it is what it is. Alright, last trade of the week we're gonna go ahead and get into. Oh, this should take so much focus. Alright, 6 o'clock a.m. And this was the trade that wound up happening today. So, of course, our levels wound up changing. Let's turn into this. Still holding at this support level, and of course we still got our fair value gap, and so all of those levels are pretty much still the same, right? If I go down to my 1 hour, it's at 9. So I'm seeing that we had a little bit of resistance right here. I'm marking that up. Nothing too crazy. Alright, this at 9:45, and today we did have a 10 o'clock orange photo news, but I think the market was really, really clear on what it wanted to do, so I got in on the sell right before the 10 o'clock news. Alright, so boom, we got 10 o'clock news. I'm already aware of that. I'm gonna go back up to like 9:45. Alright, boom. So I'm looking, is there anything that I'm looking for that's already been taken care of pre-macro? Right at 9:42, I'm noticing that, okay, boom, we have a break of structure to the downside. Alright, one of my confluences already met, right? On top of us having a break of structure to the downside, we also have a liquidity sweep or liquidity run on London's lows. Boom, two confluences are lined up already. So, okay, boom, it's looking like we're going to possibly have a sell lining up. Right on top of that, I'm seeing that we got bearish displacement. Right, we got bearish displacement right here on the 3-minute chart, right? So I'm looking at the 1-minute chart from this point because I don't really want to miss out on the setup, right? It's 9:44. Everything is lining up aggressively for me. I'm looking at the 1-minute chart. I see that we got a fair value gap. I'm like, all right, this is where I want to enter with my shorts right here, aggressive, and I want to put a 30 pip stop loss. I could have made it shorter right above this displacement. I definitely could have, but one thing that I'm noticing is that we already swept London's lows, right? And we don't have anything like this path is clear. There's no turbulence along the way. So we should be able to get down here without having any reason to go back up. So even my stop loss being here could have been appropriate because there's no support right here that's giving the price ammunition to go back towards the upside. We already broke below London's lows, and I'm seeing what structure wants to do. So I did take that. I did use that confluence earlier today on the 1-minute chart. I don't have no. I mean, London's lows is above, most definitely, for a price to want to draw towards. But before we can draw towards London's highs, where that liquidity is, it's going to need some power or some momentum from the liquidity at this level, or at this level, or at this level. So that's why I'm like, all right, bet. That fair value gap with that entry right there. Price never wound up getting back into that fair value gap, so we didn't take it. Now we're looking back. We're looking back on our 3-minute chart, or we could even stay at our 1 minute.
You need to get in?
And I'm not gonna lie, my entry would have been right here. My entry definitely would have been right here because I would have slimmed up this stop loss, and that's what I would. But I probably would have missed it, right? Probably would have missed it. This would have been a good entry right here from that 1 minute standpoint. Would have been a beautiful entry. But let's say, okay, you really use fair value gaps and price didn't type your fair value gap. So you like, fuck it, I'm not going to use that trade. On the 3-minute time frame, price still, after breaking structure, sweeping liquidity, now we got even more displacement right here. So, okay, if you don't have FOMO, you just being patient. Like, all right, I see prices tanking. I'm going to stick to my guns and hold it down because, you know what I'm saying, I know my setup coming. So that setup on that 1 minute time frame, it already came, and I'm overzealous. I'm really like, I'm a hunter. I'm a hunter in the market. I don't like sitting around waiting to get eaten. I like to go attack my prey. So me wanting to do that, I looked at that 1 minute chart because I seen that we had all my confluences already lined up, and I wanted to get in because I know we had to draw some liquidity right here below at least this liquidity support, but more than likely the previous day low with a safe exit at the top of that bullish fair value gap. But me being in the market all week, I'm knowing that price has been reacting to this with momentum all week. So at some point, we do have to break below and break into this bullish fair value gap. It can't just hold all week. I mean, it could, but the likelihood of it, based on what price was showing me, was unlikely. So now I want to take an aggressive entry at the bottom of this bearish fair value gap because price's momentum has already been showing so much bearish momentum that I'm pretty sure if it does continue to go down and attack this previous day low, it may do that with an aggressive wick. It may do it with a extreme aggressive wick, and this is just market experience. So me knowing that it may do it with an aggressive wick, I don't want to wait for a break of candle entry in this scenario. I want to take an aggressive entry because price is already very, very bearish. And if it does go all the way back up and switch to go get London's high, I'm cool with that. Because I know where price is reacting right here, this consequent encroachment. But if I do want to take this sell and bet on my draw liquidity being down here, I want to do it aggressively, right? We can see price gets in here. From this point, I'm tagged in. I'm not waiting on a break of candle entry. I'm already in a setup. Boom. being that price was already so bearish, we tapped right there at that consequent. Like it's science. It's science. We tapped right there at that consequent encroachment of that bearish fair value gap. And as soon as we got that consequent encroachment, as soon as we tapped that middle line, that 50% level, as soon as we got that, price gave a strong momentum toward the downside, breaking below this consequent encroachment of this liquidity support, and creating another bearish fair value gap. So even if you missed this entry, you could have got one more last entry right before 10 o'clock, or even right at 10 o'clock. And once again, I probably definitely would have taken this trade aggressively because the price is in a bearish trend. And if it comes back and it gives me an entry off a wick, I want to have the opportunity to take that. And now my stop loss will be above this displacement, right? Another 1 and 2 RR. Right at 10 o'clock, I'm comfortable with that trade. Boom. Boom. I mean, TP smack. 2 candles. So today it was free money if you could have just caught the trend. And that's why knowing when to take aggressive trades and when to take passive trades or just break a candle trade is very, very important. Right here, an aggressive one would have been appropriate because you're already at the consequent encroachment of a liquidity support level. We're already below the consequent encroachment of this level. Price came and we got a bearish fair value gap right above with a bearish trend and liquidity below to reach. It just made sense. But if you wanted to take a break a candle entry and been safer, you still could have done that as well. Put your stops above the fair value gap or even above this wick, right? And then you could have gotten in and still gotten the 1 and 2. So this Friday was just beautiful. This Friday was just beautiful. And I'm gonna mark up my 3-minute entries only. But yeah, this was a beautiful, beautiful Friday. I haven't been on camera in a long time breaking down trades, but now I am sharp as ever right now. I feel like August has been a tough month. I sat on the sidelines, really humble, really like just watching these money being made and just sitting down, waiting on my time. Really just like, all right, bet. I'm being a student of the game. I'm not even gonna trip about it. I'm learning my lessons. I'm letting God work on me, and I'm becoming a better trader day by day. And I feel like showing up this week was hard as fuck. This week was so fucking hard showing up every day and not actually being live and making the money. But I learned so much about my system and just small nuances, bro. It'd be the smallest nuances, like waiting for a certain time or just understanding of being in the flow, or being in tune with the market, that'll take you from being a break-even trader or a trader blowing account to somebody that's like consistently profitable. Knowing small things like, okay, maybe I should wait until after 10 o'clock news. Like even today we had 10 o'clock news, but I knew, okay, boom, I can take a setup right here because we trended toward the downside, liquidity toward the downside. So really just not second guessing yourself, trusting your intuition, your trust, your experience, everything, bro. But it's been an hour, our back test, so okay, cool. It should take about an hour to back test through a week of work. Those were my trades for the week. I hope everything made sense. And the next video on the course that we're gonna be going through is making exits and entries. I wanted to do it on this video, but I couldn't do it because my background is so loud and my mic not really picking up like that. I don't think so. So I'm gonna get back and make those videos, but this was my breakdown for the full week. And I hope everybody took something away from it.